Good evening, investors. It's been a while since we have done the Master the Market series. My name is Kevin Vincent. I'm part of the MarketsMojo product team, and today I will be taking you through some of our key features. And hopefully, at the end of the webinar, I hope you can extract the maximum value you can from the MarketsMojo platform. Okay, let's get started. Before we get started, we have to do the disclaimer. We emphasize that all investors should use the information on the webinar merely as a resource to enhance their own research and understanding. Nothing discussed in this webinar should be considered investment advice. We strongly advise all participants to check with the certified experts before taking any investment decision. Investment in securities is subject to market risks. Past performance should not be construed as a guarantee for future returns. Investment in equity and equity-related securities involve a high degree of risk, and users should not invest unless they can afford to take the risk on their investment. All right. So today we are gonna do something that a lot of people in the entire investment space often tend to miss out on or don't take that seriously. We're gonna research a company, right? So once you log on to the MarketsMojo platform, you have to go to the search bar right here. And search for a company. Now let's go with Gulf Oil Lubricants. So we are gonna just study this company and basically with the help of MarketsMojo here, and hopefully we can apply the same logic, the same steps for your company of your preference as well. All right. So at MarketsMojo, the principle we adopt, right? Or basically something that we often look at when we are creating new products is that we want to always focus on the data. There is no element of subjectivity, and hence there is no biasness that comes with it, right? Some of the key, or rather most popular emotional biases, right, that hinders into the rational investment decision making process are like FOMO, which is something that happened in the 90s during the tech bubble era, where basically people are just buying companies solely because someone in the news has spoken about it. Another one is when it comes to research, it's called confirmation bias, where basically you're looking, once a person does some level of research on a specific company, let's say Gulf Oil Lubricant, I've done some of my analysis on the company and I've invested a sizable chunk. Post that, I tend to only look for information that matches or rather confirms my view on the company. So if I think the company is good, I will only primarily give importance to the points that validate my points. We're all human. You like to be told that we are good, we are right. And we often tend to ignore points and disregard points that might be valid but goes against your view. That's confirmation bias. And biases, there are a lot of them, but just wanted to highlight some of the top ones that maybe you are suffering through, right? So at MarketsMojo, we cut our entire methodology when it comes to researching companies, and basically every bias that comes to the entire investment journey, our methodology cuts through all of that biases and gets right to the points. So at MarketsMojo, we evaluate companies based on 4 dots. Now you can see these 4 dots right here. All of them for Gulf Lubricant are all green. So starting off with so the first dot out of these 4 dots is the quality dot, right? The quality dot looks at the long-term fundamental strength of the company, right? So over here, basically the quality is evaluated based on 3 parameters: the management risk, growth, and the capital structure. So the capital structure essentially is evaluating how much debt is in the company, right? And also it is evaluating its debt serviceability ratios. So for example, dumbing it down a bit, basically, just trying to identify how much, if the company can service its debt, and making sure that there is enough leverage such that the company takes advantage of it, right? It's not. So that's basically what it is, the capital structure of the company. Second one is the growth. It is looking at the long-term fundamental. It's looking at the 5-year growth. So as you can see, the numbers are highlighted right here. It's looking at the sales growth, the EBIT growth over the last 5 years, right? And the third point is the management risk. At management risk, as I mentioned like a few minutes ago, we primarily look at the data, right? We are looking at we are not looking at the who is behind the company. Rather, we are looking at what is the impact of the person behind the company, right? And all of those numbers are reflected in your ROCE, ROEs, and so on, right? That is our belief. So basically, all of these 3 points come together, right? And give you a score, a score in the scale of below average, average, good, and excellent. So Gulf Oil has a score of good. So now the second point is valuation, right? The valuation, we basically evaluate companies based on the relative. So this is basically a very common terminology in the investment space. Basically, people evaluate. People basically just take it as face value. If a company is very attractive, people are going to buy it, and if it's very expensive, people are going to sell it, right? So the rationale behind how we come to or establish this meter right here. Excuse me, I'm just going to take a. So the valuation meter is essentially established with a methodology referred to as the relative valuation. Now we when we were figuring out how to come up with the valuation score and the valuation meter, we considered using the discounting cash flow approach, but then there is a lot of scope of estimation risk. I mean, like the numbers could just go wild if the growth rate goes up or down in our estimates and so on. So basically, we decided to go with relative valuation. And relative valuation is it is not very straightforward. We are ideally looking at a bunch of things. For example, we are looking at the price or the earnings multiple of the industry. We're comparing it against that and evaluating if the company is attractive, if it is below the industry benchmark, and if it is above the industry benchmark, we're considering it as overvalued. But that's not all. A company might be above the industry benchmark. It is possible that the company demands that kind of premium because the company is a good company. And similarly, if a company is below the benchmark, it doesn't immediately indicate that the company is undervalued. Rather, it could be that the company has been discounted to such a level solely because the company is a bad company as well. Right. So, and the third point, and also a few more, is that we also look at what the company's valuation is over its own past, its own valuations. It's all these 3 points come together and give you this meter of very attractive, fair, expensive, and very expensive. Right. Now, the third point, financial trend. The financial trend essentially looks at the long-term fundamental strength. It's looking at the latest quarterly performance of the company. So as you can see here, so basically these bars here, right here, are indicative of the CFT score or the score of the company of the quarterly performance that it published. So now, as the Gulf Oil Lubricant has a score of 12, right, based on the results that were published in June, right? So now I'll tell you how we come to the score of 12. Basically, we're looking as soon as the company publishes its results, quarterly results. Our systems essentially take a few minutes. That's a bit high. If a couple of seconds to essentially analyze the company's entire quarterly results, and we'll come up with points that are working and not working for the company, right? So here are some of the points that are working for the company, and here are some points that are not working for the company, right? Now, all of those points are essentially clubbed together, and a net value of 12 in this case is basically what we get at, right? Now, now coming back to this chart, basically this is the bar charts essentially represent the scores, the CFT score, and the line graph essentially represents the price chart, the price movement of the company. Now, what we have noticed, and this is not this is basically what we have noticed. Generally speaking, a company that has been publishing consistently positive financial trend score often tends to be rewarded by the market eventually, right? So as you see, the company's price was not doing that great, and eventually its price eventually caught up. So it's not a guarantee per se, rather it is basically a general general trend that we have noticed, right? Now the fourth point is technicals. Now technicals essentially is, again, just a moment, please get my charger now. I think it's gonna go down. So the fourth point is the technicals. Now the technicals essentially is the technical analysis. Again, a very common point, and again, it should not be considered as intraday calls. Rather, it is basically we are looking at it from a weekly and a monthly standpoint. So, for example, in this case, the company is looking bullish from a MACD, RSI, Bollinger Bands, moving average, all the 7 parameters that we have in place, and I think this should indicate that these are not intraday calls. Now, if you see the triangle, green triangle essentially indicates it's the company has just turned bullish. Right? Now it's right here, and the company turned bullish back in 15th, mid of June 2023, and since then the price has risen up. Now post that the company is still bullish, by the way. But my core point being the case that we identified the trend, the long-term trend back in June, right? It is not intraday calls. These are rather just trying to establish what the long-term price trend looks like, right? So these are our 4 points, right? The 4 dots. First, quality. Again, recapping it. It's basically evaluating the long-term fundamental strength. Second one is valuation. It's identifying if the company is very attractive, very expensive based on relative valuation, and a few more points. Financial trend essentially is evaluating companies based on the evaluating companies' latest quarterly performance and comparing it against the previous previous few quarterly performance. And the 4th point is the technical analysis of the company, where we are evaluating the company's essentially trying to establish the price trend from a long-term perspective, which is clearly indicated by the weekly and the monthly perspective we are looking at. Right now, these 4 points come together, and basically we arrive at a score. Right now. Now we have a score based on the 4 dots working together. We have a score of 81, and that falls in the strong buy section, right? Now, there is a story behind the score. So initially we had just the 4 dots, right? People were very confused regarding what does this mean. So because initially it was give us this 4 dots, and it was subject to interpretation, right? That's the best way of saying this. People didn't know what point needs to be given more importance. Is it valuation? So often there are still cases today where the company's quality might not be great, financial trend might not be great, but the valuation is very attractive. Does that mean I should buy it or sell it, or what should I do? So we got a lot of queries like that when we started off, and taking those feedback into consideration, we came up with the idea of a score, and eventually that score translated to a buy, strong buy, sell, strong sell, so on. So we basically had a scale of that as well. So now in this case, the company's 4 dots, quality, valuation, financial trend, and technicals work together to give you a score of 81, and that essentially translates to a strong buy, right? Now, the reason behind why the company is a strong buy, I highlighted right here. The first one being that there is the it has a high management efficiency with a high ROE of almost 24.5%. So this is exactly what I told you in the valuation section, in the quality section. Quality is based on 3 parameters: management risk, growth, and capital structure. Now it is looking at the management's efficiency and it has pretty decent efficiency, as the ROE is pretty high at almost 24.5%. Right? The company has no debt whatsoever. Then the company has declared a positive result of over the last 5 consecutive quarters. So again, we are looking at the safety score here. The stock is technically in the bullish range. It still is. It's been in the bullish range over the past since last June, right? And it has a very attractive valuation with an ROE of 23.8 and with a 5.1 price to price to book value, right? So now we have essentially, long story short, if you don't want to take an effort of going through this data, doing some some groundwork, evaluating these numbers, you don't have the time to do it. You can just go to the dashboard. You can evaluate the company, our score behind the company. We have done the analysis for you. You can just evaluate it by looking at the score and what its translation is, and what are the rationals behind the score, right? So this is basically what the score is and how you can evaluate the company, how you can analyze the company. You can also, this is not it, you can also go to the return section and see how the company is performing on a relative basis. I think a lot of people tend to miss out on this point. Maybe it's a big myth, and I always tend to, whenever I get the opportunity, I tend to always speak about this, is that returns should not be evaluated on an isolated basis. Apne positive returns bana diya is not a win. A win is always considered when you're evaluating it against a benchmark, right? So in this case, Gulf Oil Lubricants is compared against Sensex, which represents the overall market, and the sector. So, and it is outperforming on both levels. So over the last 1 year, Sensex is up by 22% and the sector, right, is up by 75%. And however, Gulf Oil Lubricants is up by almost 120%, right? So it is outperforming on the market level and on the sector level, right? You can also evaluate, so basically this chart also shows the same data on for different time periods. Now we are looking at the 1 year right here that's highlighted, but you can also evaluate it from other perspectives as well. Then we also have a concept called quartiles. Kind of interesting, actually, something that we have built in-house. Basically what we are doing here is we're basically looking at, so I'll give you an example. Let's say an industry basically has 100 companies. So we are identifying, we are basically listing down companies based on the total returns that it has generated. So the highest, if within that industry, let's say in this industry, Gulf Oil has given crazy amount of returns. In this case, let's say 30%, right? For the March to June quarter. What it will do is, what we are doing here is we are creating a list of 100 companies in case there are 100 companies. This is an example. We are sorting them based on their returns, total returns from highest to lowest. Now the top 1 to 25 companies will come under the first quartile, and the 25 to 50 will in the second quartile, and 50 to 75 in the third quartile, and so on, right? And accordingly, we are highlighting what its performance has been, which quartile has it been in, based on different time periods. So in QTD, quarter to date, it's the second March to June, first December to March quarter, second quartile, and so on. So it's an inconsistent performer. So, but it is, it still is in the top 2 quartiles for the last 3 quarters. So it is inconsistent on a holistic basis. However, from a very recency basis, it is doing quite well. So it's an interesting point. I would like to, I would honestly, it's something that you should definitely explore. It gives you some insight as to if the company has been, it's performing, what is its consistency looking like, right? Now we also have the news section, where essentially it is something, again, in-house built. We're not just pulling news feeds from Google, rather this is basically an in-house built research news that comes out. So what we are trying to achieve here is basically we're trying to make sure that a person's entire research and starts and ends here, right? You can basically have all the necessary information to make an investment decision here, and we have tried to include the entire news section as well, right? The next one comes the financials. Financials, we have data on a quarterly, half-yearly, 9-yearly, annual, P&L, balance sheet, cash flows. Now this is basically if someone really wants to deep dive into the data, we are always there to help you out. Now on the quarterly section, we have the highlights, net sales for how much is it grown by on a QOQ, YOY basis. What is the net profits looking like? What is the interest looking like? And so on. And these are the highlights are always highlighted on the right side as well. So on the left side, the card is basically indicative of as a summary card, right? And if you want to jump into the data, you just need to scroll to the right. Scroll to the right and you can see each of those 5 points that I mentioned. So for example, let's say net sales. Net sales, the company on a QOQ basis has slightly fallen. It's still positive, 2.8%, but it's fallen relative to the previous quarter. On a YOY basis, again, positive, but not what it used to be in the last quarter, right? So basically that's how our entire structure of data, how we present it is. You can go down, again, a snapshot is available along with the highlights, and then you can just scroll to the right and evaluate all these companies, right? These key points, right? Similarly, you can do the same thing here. Now, another point, this is something I like to do, and I think a lot of people share my opinion on this, is that I always like to see who owns the company, right? Now, so in this case, it essentially is a clear snapshot of who owns what. So 71% is owned by promoters, 16.42% is owned by non-institutions, 5.65 by FIIs, and 4.81 by mutual funds. Something that, another thing that something that is used standard practice is that always assume that the bigger companies have teams sitting and identifying, are learning more about the company, getting the ins and outs of the company. And when they are ready to invest a decent chunk of their investment, so I think looking at the mutual funds, like 4.81% is invested here. I would say that okay, now these guys have done their homework. They have gone above and beyond, like beyond us. And if these guys are putting money, there is something behind it that that is working, right? So you can evaluate the shareholding, its analysis as well as highlighted. It's FII's holding, how it is looking like June, September on a quarterly basis. Mutual fund holding, insurance holding, what is the other parties' holdings looking like? What is the actual shares that they are holding? What is the percentage? And promoter holding, and if all of these cards essentially have a full detail options. So I think it'll be better. Sorry, I think it'll be better described right here. Refresh the page. You can click on full details here, and just do a quarterly basis analysis, comparison rather, of what has changed. Foreign promoters, I think it seems to be very high. Total promoter holding is at 71.76%. You can see what the insurance companies are holding, how much the government holding, 0.3%. And so on. So basically, you can get into the nitty-gritty of it. Who are the top holders? It's a few mutual funds. Promoter holding, the international company in Mauritius holds, a decent chunk of the company, majority of it actually, and so on. So basically, you can just go through this section, click on full details, and just dive into the data. Right? Company CV, basically, it's for people who want to learn about its history and board of directors, and so we can just click on about the company and learn more about the company. It was formerly known as Hinduja, so on and so forth. If people, it's basically we have created this entire section, or rather this entire page is designed for people who can basically come in and start learning about the company, and by the end of maybe 20 minutes, if you really are diving through the data, you can kind of come up with a conclusion, right? That's what we are aiming for. Something actionable. Right? On now at the final part, as I mentioned, all the data points should not be looked at in isolation level. You should also do some relative comparison. So that's why we have compare with peers section, where you can compare the stocks, the 4 dots that we have in place: quality, valuation, financial trend across the industry. Right? You can click on full details here, and see what are the other companies in the industry looking like, and if your company is in the top. You can evaluate the quality. Now in this case, I think Gulf Oil Lubricant is good, and it seems like Castrol is another company that that basically has the same quality, good quality. Valuation also basically evaluating what are the valuation looking like. Is it very attractive? In this case, it's very attractive. Castrol on the other is very expensive. So one plus point here for Gulf Oil. It's return analysis, return comparison. I mean, Gulf Oil Lubricants. You can evaluate the performance. Actually, you can click on full details and go above and beyond. You can go back to 10 years and see that Gulf Oil has done really well compared to its other peer. Then again, you can also evaluate what the shareholding of these companies are looking like. Castrol is by default here. It's looking at its top peer right here, and promoter holding, you can see Castrol does not have much. It's just 51%. On the other hand, these guys have 71%. FIs are much higher at Castrol, and so on. But so basically, that's the extent of it. That's how you entirely come up and research the company, right? Now, if you're on the move and you would like to just like to read the report, take your sweet time, and you want to do it offline, you can just, whenever you get the chance, you can just click on the download now report, right? And I think the time is 5:30 now. You can click on the report, and this report is going to be generated on a real-time basis. See, report is as on 16th August, almost 5:29 p.m. right? Exactly the same time as now. Now this is a verdict report. It basically is highlighting Gulf Oil Lubricant. Strong buy. The company, what is the highlights? It's low debt, 5 consecutive year, bullish, very attractive. Now Gulf Oil Lubricants, strong buy. Why is it a strong buy? Is the stock for you? Return some? Basically, the key point here, maybe I'm moving over, is that all of these reports are dynamically generated. So what you're seeing for Gulf Oil is going to be very different. This is unique to Gulf Oil. If I search Infosys and get a report on Infosys, it's very likely that the report is going to be very much different, right? What are the risks looking like, and then what are the top points? Now, as I mentioned, like why it's a buy rated company. It is rated by company because it has a high ROE. It's looking at individual points with the tax ratios looking like institutional holdings is at 10.89%, right? Company has low debt. It has almost no debt. Company has declared positive results for the last 5 consecutive quarters. What is this PBT trend looking like, and so on. So you can keep scrolling through the data. As I mentioned, the cover page is basically going to be your summary page, and post that you will find every point that is working for the company, and again you will also find factors that are not working for the company, right? And again, at the end, there's a peer analysis and about the company and so on. So basically, all of the data you can read through it. Right. So this is basically the point I wanted to come to. It's a good segue. This company also serves is part of the 1% of the across the market. It is on the top 1%. That's part of the Mojo stocks. Now, what is this Mojo stocks? Let's get into that. To access this Mojo stocks, you need to go to stocks, go to the top Mojo stocks, and just click. Right. The Mojo stocks, as highlighted right here, are the top 1% of the market. Right. So, I'll just, it's basically all the companies that have really high scores. So, and these are the top 1% as indicated. You have a score of 82, 87, 82. So these are pretty highly rated companies. Now, whenever these companies enter the list, we start tracking the performance of the company since this was added, the performance of the benchmark and the sector. So in this case, these companies have been here for a while now. Let's look for something that was recent. Tips Industries was recent, a bit more recent than that. 4 days ago. So let's look at let's look at Supreme Petrochemicals. Now this company basically was added to the list on the 12th, so 4 days ago, and it's already up by 3.32%, while the market is slightly up by 0.6, and the sector is actually down by 1.31%, effectively outperforming on a market and a sector level, right? Now, these are the top 10 lists. However, I'd like to highlight that we have been, this Mojo Stocks is one of the most popular and, one of the early features that we had on the platform. So, just to give you an idea, now this is basically our entire list. You can access it by clicking here. You can also evaluate the current list on a market level, market cap basis. You can evaluate them. Now, coming to the full list. Can evaluate now the black stripe that we have right here basically indicates it's currently listed, right? And the white one indicates that it has been removed from the list. So and I would like to highlight that we have done very well. Some of these companies, now Trent is still in the list. It's been added for almost a year and it's generated decent returns. And these are all the companies that were in the list as indicated by the white stripe. And some of them are still here as indicated with the black stripe. So we have done this. This strategy has worked very well. However, we are not gods, so we have some negative performance as well. But we have made a point to always exit whenever we see it is not going our way. Right? We are not afraid to book losses. Booking a loss now is better than waiting for it to recover someday and taking a bigger hit. Right? Another bias a lot of people tend to have. They would like to hold. It's a bias. It's a very strong, and I think it's preyed on. A lot of people fall prey to it. Basically, you hold on to your losers for a lot longer compared to holding on to your winners. Winners, okay, performance aa gaya, I'll just quickly exit. But companies that are losing, these companies might have been great, but they are no longer great. So you might tend to hold on to them for a bit longer than you should. We don't follow that approach. We if the company is not good enough, it's going out of the list, and we'll bite the bullet. We will take the loss. Okay, so that is one of our first strategies. We also have three more strategies in place. Hidden turnaround. Now, hidden turnaround essentially is is basically our companies that have just given a really splendid quarterly performance over a series of negative consecutive quarterly performance. So, and essentially indicating that this company has a scope or has the potential for a turnaround, right? And these companies tend to be a bit aggressive. So ideally speaking, it's for someone who has an aggressive risk profile. We'll talk about risk profiles in a bit, but it is for people who can stomach volatility and can afford to take the risk, right? So basically, these are companies. The hidden turnarounds are those companies you can again evaluate them based on. You can see the entire list. Click on the full list. You can evaluate what the current list is and so on. Keep in mind that these, please don't act on these advice. Please, these advice are primarily for paid clients, and these are all for sample information. Please don't act on it. So now we have reliable performers. Now these are companies that are best, as mentioned here, companies showing best in class growth. These are companies that these are basically companies that are reliable, who have been performing consistently over the past few years. And these are the companies that enter this list. Again, you can evaluate these companies. We'll have the returns, the BSE returns since it was added. What is the entire list looking like? You can sort them based on returns, risk, and so on, and evaluate the companies for themselves. I'm not selling this to you. If you don't like the performance, you don't need to enter this list. But I feel like the numbers speak for itself, right? Momentum now stocks. Basically, these are companies that have the momentum going for itself in the current market phase. So it is giving momentum more priority rather than the fundamentals. So as you see, some of the companies have done very well for itself, but if you can keep scrolling down, you'll see the entire list. We are not afraid to show you the entire list, so feel free to go through it if you're a paid client. Keep in mind, I'm sorry to reiterate, top Mojo stocks, hidden turnarounds, reliable performance, momentum now, all of them are a paid feature. You can access them by clicking on paying for the services. And I think we have a good deal happening right now. We have a Freedom Independence Day deal going on, 16,999 for a year. So take advantage while you still can. Although we just went through we had a 9th anniversary that we just completed. We were giving out free years back then, but you can't expect that kind of deals anymore. Primarily because we do it very we throw in the free years, the concept of free years only during that our anniversary week. And if you're waiting for those kind of deals, you'll have to wait for another year. Maybe we might not even do that the next year. So take a full advantage of the deals that we have. Our prices are always increasing, so take advantage while you can. Right. So now that we've spoken about our strategies, now we have learned how to research a company with MarketsMojo. You can do a summary based, you can just evaluate the company as to why the company is buy based on the rationals highlighted. You can also get investment ideas with the 4 strategies that we have here: top Mojo stock, hidden turnaround, reliable, momentum now. And you can basically, I've told you ideas, way of generating investment ideas. Right? Now, in the entire investment journey, right? Like, does the entire investment journey end with just investment ideas? For a lot of people, unfortunately, that is the case, right? People often just want that stock. And make a idea de do, I'm happy with that. Give me like a list of companies, I will just invest blindly, right? And I will, unfortunately, for a lot of people don't tend to even revise their, they don't track the company post buying it, assuming that a company, which is good right now, might remain good forever. Right? It's a myth, unfortunately, and people again fall for this bias where they, they've done their research and they've put a significant amount of money in it. Now, unfortunately the company is no longer a good company, fundamentals tend to change. It's not always going to be the case that a good company is going to remain a good company. In which case, basically, you need to you need to keep track and adapt and make moves when the market changes, the fundamentals changes. Now, and what I'm heading towards is the model portfolio. Now, I will tell you how it works. So, model portfolio, just to give you some context, is we are not just giving, in this case, we are not giving stock ideas. Yeah, what we are doing here is we are helping you out from a portfolio approach, which honestly, my personal opinion, is the right way of doing things. You should not look at investment ideas and just blindly investing in them. You should diversify your whatever controllable risks that you have. Obviously you can't diversify company specific risk, but market specific risk is definitely diversifiable. So you should take full advantage of that and basically create an entire portfolio rather than individual few companies that you will just invest and just forget about it, right? What we are doing here is we are investing, giving you a list of companies to invest in, giving you the right allocation, right? How much to buy, and we keep track of what companies to sell, what companies you need to add more quantity to, and so on. And we are keeping track of that, and basically you get notification in case there is any change. So let's create a model portfolio. So I already have 4 model portfolios. So let's create a 5th one. Okay. So now we ask only 2 questions here. The first question being, what is the investment amount you want to get started with? So in this case, let's say the minimum amount being 1 lakh. So let's say I want to get started with 5 lakhs. 5 lakhs. Okay. The second question is the risk profile. Now, as I mentioned a few minutes ago, I will talk about risk profile. So a lot of people should categorize, and it's something that a lot of people tend to miss out on, is that you should identify what your risk profile is, right? If you're able to stomach volatility, and for example, let's take it a step back and let's identify. So now a lot of people will have different investment objectives. Now, one of the primary objective behind investing is retirement, right? Generating a retirement corpus so that whenever you will retire, you have enough money to to depend on once you retire and you're relaxing, right? Now, taking that investment objective into consideration, let's create a portfolio, right? Now, for me, I am a young guy. I have my entire life in front of me, right? So let's say I plan to retire in 40 years, right? From now, that essentially indicates that I have 40 years to reach my objective goal, meaning that I have enough time for me to lose all my money and rebuild it from scratch, meaning I can stomach a lot of volatility, meaning I'm an aggressive guy. Right? If I am close to my retirement, if I'm like maybe 2 years away or 1 year away from my retirement, it is not very likely, it is basically your obligations, right, is about to come due, and you don't want to play around with your money because you don't want to take bets that might end up jeopardizing your core investment objective. For example, and this unfortunately happens quite a lot, people who are close to the retirement, they spot an asset class that is too volatile, but is generating a lot of returns, and people are talking about it. So an element of fearing of the emotional bias of FOMO, like fear of missing out, comes into play. People will put their retirement amount in this volatile asset class, and in case things don't work out, which does happen, you have jeopardized your entire investment objective, right? Like there is an objective, you're trying to achieve it, and your objective was, let's say, 10 crores, it falls to like 785, whatever, it falls below that objective, and you need that money to survive post retirement. You will either have to increase you'll have to basically postpone your retirement, or basically increase the which most likely you'll have to do that, or you can basically increase the amount of money that you're that you're SIPing into this entire space. So accordingly you should basically identify what your risk profile is. Another way of doing it is basically if you can stomach volatility. It's the best way of doing it. Simple way of doing it. If you can stomach volatility, you are an aggressive guy. If you should be an aggressive guy is another story, but you're an aggressive guy. If you cannot stomach volatility, if let's say like a 2% move in the market is you can't take that stress, it's causing you headaches, mental headaches, then basically you are a conservative guy. But if you're a conservative person, but your investment objective is like years away, then maybe you should, at that point you need to kind of educate yourself and learn, okay, there is time, I can still make it, right? At the end of the day, reaching the investment objective is the goal, right? Anyway, so getting back to this process, 50,000 rupees is basically what I want to get started with, and I am a young guy. I want to create a retirement corpus of whatever amount. I have read the understood the disclaimers. I've selected aggressive and generate a model portfolio. So in this case, basically at this point, it is basically creating a model portfolio, evaluating what is happening in the market as well, right? So and as I mentioned, it is also this is not just a list of ideas, right? It is also evaluating the allocation as well. Now in this case, it has 10 stocks, 9 sectors. Highest sector is the finance, NBFC. All of them have good quality, better financial trend, mildly bullish, better technicals, and this is basically what the market cap allocation looks like, sector allocation looks like, and the final point right here, it will give you a list of companies, right, along with the quantity. Now this is basically where the key differentiator comes in from your investment ideas, right? These are companies that have, that are one of that are working quite well in the market right now, and we have also highlighted what is the amount of allocation you need. Now, effectively, we are in the range of 9.3% to 9.9% allocation across these 10 companies, right? So you can name you can name this model portfolio, and you can click on continue. Post which you can basically, this is a deal sheet that is created. You can use this, and I think that's a very good point. So basically, deal sheet has been created, and you can basically have it executed with your broker on call, or you can just do it by yourself. Your call on this. Basically, we are not in the broking side of things, so you can just choose whatever option that you have in mind, right? So now this is the aggressive 5. This is the model portfolio I just created. Now, coincidentally, as I mentioned, like before we got started, I already had 4 model portfolios running, and these are those portfolios, aggressive 1, 2, 3. So here I've already been asked to sell these companies. So as I mentioned, we are not just looking at, it's not a one-time thing where we are telling you what companies to buy. Rather, we are also looking at the companies that you need to. We are tracking your portfolio, telling you what companies you need to sell, how much you need to sell, and move on. I think in this case the quantity has been highlighted. What is it? Price and the quantity has been I think this is the same. Yeah, the same company has been asked to be kicked out from these 3 portfolios, right? And the amount, transaction value, what is expected value, and what is the short-term tax that is associated with it, right? So I think this is very effective in at least the approach on how to do the entire cycle ends here, the investment cycle, right? So we just move on. So it is not so the process starts with you identifying, a list of companies, whatever, and you create a portfolio, right? I should say portfolio. But now at the model portfolio level, we are actually giving a proper allocation, and then we are tracking it, and if there are some bad companies, we basically tell you to get rid of them. There's some good companies that have been added to the list. We'll tell you to do so, and the cycle continues, right? So that is the entire model portfolio for you. So, so today what we have learned is we have learned how to research a company. We have learned how to, what are the 4 strategies that we have in place, and you can feel free to go through the entire history there. We're not cherry picking our performance. You can go through them. We have some loss making ones as well, but majority of them are doing quite well for themselves. And then maybe personally for me, the right way of or the complete approach of investing is the model portfolio approach, where you're not just looking at a few ideas, looking at the entire portfolio perspective, where there are, you get to know about how much to invest. Some people might just go overboard with some company and keep the rest of them as tail stocks, right? Representing very small percentage, a fraction of the entire portfolio value, right? So that's pretty much it. I think we have some more time. I think let's do the Q&A session, and I hope I can if some people have, if you have some questions, we can take them now. When will we have a webinar of Mr. Sunil for Mojo One, right? Why did it stop? So he's not stopped webinars. This is the face of MarketsMojo actually. So we're not asked him to stop. He's actually busy meeting company managements and so on. So he's just not in the office right now. He's just going on round trips, basically just meeting company management and so on. So he will be back, and so don't worry about it. Is there any change in the Diwali portfolio? Please let me know. Mr. Rajesh, so my colleague Prashant is basically the one who actually tracks the Diwali portfolio, which he gives an update on every Monday. I believe it's the latest editions. That's what the webinar is called, where we basically highlighting all the companies that are latest, that have been added to the list. You can please join that webinar. You will get the update there. Mr. Prabhu, can we use the screener to sort stocks based on Mojo score? It's a very common question that every time I get this question. Unfortunately, we don't. But I'll give you the closest thing that we can do. If you can, Amir, if you can share the screen now, I'll just show you what we can do. There we go. Thank you. So you can so the screener feature. Okay, I didn't speak about this, and I'll speak about it now. You can access it by going to hovering over the stocks section. And on the middle part, screener. Just click on that, and now screener, it's another term for it is a filter, right? Basically you can add as many filters as you want, and based on the quality dot, the valuation dot, financial trend, technicals, size of the company, returns, growth factor. We have a lot of data. You can filter through them. Basically, you can come to a list of companies that basically. Basically, you can arrive to a list of companies that matches those criteria. So now, let's say now you mentioned, sir, was it Mr. Prabhu, sir? Yeah, that you wanted like based on score. The best thing to do, sir, is to just filters these companies based on the 4 dots that we have. So I think Mojo Expert is a bit complicated. I think the one that you mentioned, with the score, I think the closest thing has already been pre-built in the Mojo Logic screener. The quality is excellent, good. The valuation is very attractive. Financials are outstanding, positive, very positive. And let's add technicals as well. I think we are looking at only the 3 dots here. Let's look at bullish and mildly bullish. The list is at 76 companies. We can further narrow this down. Let's go with mildly bullish. The list of companies already is at 10. Let's see if we can drop this list down even further. Financial trend, there we go. It's already down to 2 companies, right? And let's see if I can take this down even further. Let's go with market cap. Coincidentally, both of them are small cap, so it's not big enough, but sure, market cap, you can evaluate these based on market cap and industry. So now this is the closest thing you can do, sir. You can actually, we can relax the filters, right? By clicking on the mildly bullish and changing the other factors. Now it is 8 companies in a valuation. I want it to be very attractive only, so I remove attractive. The list of companies at 4, right? So it depends on what you prefer. Honestly, you can let's go with the the best of the best. In which case, if I remove this good part, okay, so it's not. I've narrowed down too much. There are no companies that qualify for this. Valuation is very attractive. That's fine. Let's look at outstanding. Let's focus only on CFT that is outstanding. Again, too narrow. And technicals, let's go with only bullish. How many do we have? again too narrow. So basically, this is the narrowest list that we have of the best companies. 4 of them. I mean, at the moment. I mean, please. Basically, this is what we have, right? So I hope, sir, that this whatever I mentioned right now, how to take advantage of the screener, right? Something I didn't cover. You can just we don't have the score, but you can just take full advantage here and try it out. Do we have any more questions? Okay. So no more questions. Would love to have more participation. If you have any questions regarding the product, and if you have any questions regarding the product, or for that matter, if you need any assistance trying to understand something, my email ID is kevin@marketsmojo.com. It's KEVIN@marketsmojo.com. I can, if there is any help that I can do, I can help you out. I can definitely do that by connecting you to the right people. And if you have any questions regarding the product, I'm definitely available for calls. Not for calls, I mean on emails. I can definitely give you a response. And if it is very important, I can definitely get on calls as well. Right. Next week, hopefully, if we are doing this again, I would love to go through the other features that we have. We have the personal portfolio, the watch list, the portfolio optimizer that we have, and along with the switcher reports and the results section. Now, these are some more interesting points that are part of our entire suite of premium features. And as I mentioned, portfolio approach is always the best way of looking at things. So next time, I think we'll focus primarily on the portfolio approach. And in case you have any questions, again, you can shoot me a message. Good luck to everyone, and it's a long weekend. The weekend is about to start, so you can take advantage of that time and go through the platform. And if you have any questions, shoot me an email. All the best, and Godspeed. Good luck.